Good day, everybody. Peter Klein here, Chief Investment Officer, co-founder of Align Wealth. We are a wealth management firm and focus on helping our clients achieve their goals. And many times those clients include foundations, family foundations, charitable groups and charitable entities like donor advised funds. But today, let's focus on the family foundation. Oftentimes, a patriarch or matriarch will have a monetary event in their world and in their lives, selling a business, selling a piece of property, whatever it might be, going public, 100 different permutations of that, all good. However, it also then brings in the next sort of idea, which is, hey, what am I going to do with this capital legacy-wise? And this is where we get involved because we want to make sure our clients understand their role as well as our role in helping them craft that legacy going forward for generations to come. Oftentimes that moves into charitable planning and private foundations. So when we start getting into that world, we get into a lot of interesting discussions with respect to mission alignment and values, and who better to discuss those matters with us than our friend and CEO of Ethic, Jay Lipman. Jay, welcome.
Peter, fantastic to be here, sir. Just a small note, I'm not the CEO, I'm the president, one of the co-founders. Okay. Very, very glad to be here and very excited to continue the conversation.
Great. So from your lens, you know, I set the table here with family foundations, newly established. Now they're scratching their heads. They got $5, $10, $25 million of newly found wealth into a foundation. It's no longer their money. They're the stewards of it. It's their legacy, but it's society's money. You know, that's how it works. And they've gotten fairly, substantial tax deductions, et cetera, for doing this. And now it's in a foundation. Now they come to me and come to us together and they're saying, okay, now what? I suspect that the first thing you might suggest they look at doing is sort of looking into themselves introspectively to sort of figure out what might be a mission statement. Is that right?
Yeah, I think that, so much of what all of us intend to do with the idea of a foundation is to understand what the purpose of our capital is going to be. Because a foundation is, the altruistic mechanism by which we can use our capital to have the impact that we want to have on the outside world. And I think that, such an important part of that process is actually stepping back from the investment conversation, not talking about numbers, not worrying about, asset classes, and actually saying, what is it that we're trying to achieve, right? What are the issues that matter most to us, not just individually, but as an organization? What is this foundation going to stand for? And can we get that down on paper? And that's why we talk so much about this idea of a mission statement being that codification of that, that value statement, right? Of it actually being something put on paper that reflects exactly what it is that all of the stakeholders involved have agreed upon is going to be, the modus operandi for the organization moving forward, which is why, we focus so much on having that conversation before any, talks of investments or asset classes ever even start.
Yeah, it's the spirit of the organization. Oftentimes we suggest those foundation in the making, this early stage of the foundation to video record it. Because you know what, 2-3 generations from now, the spirit of those founders may get whittled down a bit. And so it's important, I think, for the 3rd, 4th, 5th generation, if this was so to last that long, and many times they do last even longer than that, these foundations, it's important for them to get a sense of what the thinking was early on. Now, again, you could always pivot and change and make alterations to that as the world changes and thinking changes. But I think it's important for future generations to understand the at the inception what the spirit of that was. And I think you're right, spot on with the mission statement. We use the investment policy statement on the investment side, but part of that is an addendum. We do look at mission and we suggest our clients do that. When they do that, what kind of discussions do you suggest they have? Is it more or less, hey, here's what we want to do? Or is it more like, this is what we want to make sure we stand for? Or maybe a combination of both?
Well, it's such a fascinating process to go through because, you're so rarely dealing with one individual, right? Especially with the foundation, you have multiple stakeholders that all feel bought into what that foundation should be doing with its money and what it should be prioritizing from an issue basis. And so, ultimately what we're trying to create through this process is consensus, right? To a degree that allows us to actually create that unified, codified version of what the values are, and then allows us to implement that through investments themselves. And so, we go through something called the values mapping exercise, which is a process that Ethic does with our clients. As you know, you've gone through clients with it, which actually engages each of the individuals to establish what their priorities are and what the taxonomy of issues is going to be. And so if you have certain individuals that believe the foundation should be prioritizing climate issues, deforestation, pollution, others that want to prioritize more social issues, women's rights, human rights, and then some that want to prioritize the corporate issues, the corporate leadership issues. We want to get that gauge of what each individual cares about, and then we try to drive towards consensus by workshopping it. And that's actually such an educational and honestly just enjoyable experience to, number one, understand what everyone does want the organization to reflect, but be part of the process to actually agree upon what the organization will ultimately reflect. As you said, not just now, but with every generation that starts to become involved in the organization, they look back at what the initial pillars were, that foundational document, and then they can evolve it over time as the issues do evolve, because the issues always evolve, right? We see this every year. Certain things will be at the forefront of our minds, whether that's forest fires because of what's going on in California, whether that's human rights issues because of the protest last year. Different issues will be at the forefront of what it is people prioritize, and the document will evolve evolutionarily through the years as a result of that.
Right. And, one of the things that we always think about when we're speaking about legacy planning for our clients is we like the idea of having a family foundation or some sort of charitable initiative, because it's found in, study after study that the family's fortune, the wealth, will not dissipate. Usually it dissipates in the third generation. That's what we've seen in the past, unless there's a binding legacy or a binding involvement. And oftentimes charitable planning is that sort of connective tissue that keeps the generations together and the wealth together and compounding over time. So this type of iteration, this type of work, this introspection, I think is clearly important from a foundation perspective for them to be effective in their work going forward. And we'll talk about both the giving and the investing side and how that is being interestingly morphed lately, but it's also important from a family perspective as well.
You're completely right in that, so much of this conversation around what the values are should happen separate to what the investment conversation is, because the foundation should have that document to be able to point to, with each new family member that gets involved, with each generation that gets added, to point to say, this is why we founded the organization. And this is really the kind of the direction that we've agreed upon in advance, so that it doesn't get thrown off track. And so that the wealth does get protected in the future, and that there is more of an ability for the individual stakeholders in the foundation to really point to it and say, no, we've agreed upon this in the past, right? No matter what the popular investment is, or, what pressure there may be, this is the alignment that we agreed upon in advance. And that's actually what allows them to really maintain on track for generations to come.
That's right. And, dialing back the calendar, say maybe as little as 10 years ago, this conversation would be very strange, because people would then ask, why are you even having this conversation? You put money into a foundation, you now give it away to the various things you're interested in or the family's interested in. Well, how does investments come into play? And I think the big change there, right, about 5 years ago, when the Ford Foundation decided to begin to use a portion of their balance sheet to mission align. Before then, it was always like you had a portfolio, it generated some money, and you gave that money out to nonprofits that needed it, if that was in your scope. But now we're seeing both that, the giving, but also the investing. In other words, why isn't your corpus, why isn't your foundation assets aligned with your values, aligned with your giving? it'd be kind of silly to support, a various number of organizations and to have the opposite or opposing view within your portfolio. And that's where ethic comes into play, right, Jay?
Well, I mean, this is, really the basis of what we believe, foundations should be thinking about, is that the mission of the organization is so often so focused and so altruistic and so passionately towards one issue. Are the investments that are separate to the donations actually running counter to the goals of that philanthropic giving? And so as we think about, let's say an organization is prioritized on climate, nature, biodiversity, conservation, and a good amount of the portfolio is invested in companies that are degrading that natural world through their corporate activity, you are directly supporting that action that is actually running counter to whatever the philanthropic giving is that's being done. And I think, and again, I keep talking about what, the important factors are here, but, there are some of these myths that exist within sustainable investing, some of these myths that exist within values-aligned investing, to think, well, we need to invest that way in order to protect the capital so that we can donate things in the future. But so much of what has changed and evolved in this space is the realization that those companies that are acting in an irresponsible way, that are degrading the natural world, that are running counter to basic fundamental human rights, whether it's gender or race, those are not the companies you want to be invested in, because there's a lot of risk involved in that, right? The world is changing. Yeah, you want to talk about the risk?
At risk, yeah, because that's what it's at. Because listen, all right, maybe there was at one point years ago, and it's been refuted, a myth that suggested that you would make less money if the portfolio would not do as well if it was aligned with mission rather than simply with the profit motivation. That's been debated and refuted, but it's more than that. It's not just a performance on the upside; it's a performance on the downside. You're dealing with potentially less risky enterprises, and therefore the drawdown on those particular investments would be a lot less than those that may have a different model or modus operandi. So I think you're spot on there. I think it's not just the return, but the risk-adjusted return that we need to look at. And that's what we do at Aligned Wealth when our clients are reviewing their portfolios, and we work alongside with Jay and his team at Ethic to make sure that the portfolio is in concert with their values, with their beliefs and their giving. Because otherwise, it's kind of silly to be investing one way and giving and supporting in another. So, Jay, just winding it down here, when foundations come to guys like me at Aligned Wealth, and we bring the folks at Ethic into play and work together, you guys have a defined process that you go through to analyze an existing portfolio with shining a light on their values at the same time. What kind of report can we get back from you on that kind of process? Is there some kind of analysis that you provide us to say, hey, here are some of the bright spots or the concerning areas of the portfolio?
No, of course. I think that every investor should know where their money is, right? Whether it's your 401k or your personal account, or whether it is tens of millions of dollars in a foundation portfolio, every investor should know what their money is actually doing. And so what we focus on is that transparency. So we leverage a huge amount of data around all these different issues to look into a portfolio and give the investors, foundations in this case, the transparency to say, look, we know that you prioritize these issues because that's what the foundation is built upon, but we can show you directly what's in the portfolio right now that contravenes those values. We can show you exactly which companies we believe are actually running counter to the mission the organization was built upon. And that's what we do through our health check technology that you've seen before, that runs that analysis to give that level of transparency, just because, whether it's acted upon or not, everyone should know where their money is, just like you should know what you're eating, just like you should know if there's clean air in your home, right? You should know, and then you can make a decision whether to act on it or not. But
right,
to not use that transparency in that data, why would you? So we try to give that transparency.
And then armed with that analysis, financial advisors, folks like myself at Aligned Wealth and our team are able to then go to the board meeting of the foundation and explain it and say, hey, here's what you've told us your interests are. Here's the spirit of this of this organization, and here's why. And we go through all that with them at sort of a deep level. And then we say, but the portfolio, the one that you had, previously to our engagement, is managed in a way that is counter to that. Let's fix it. And then in fixing it, we go back to the folks at Ethic, and they assist us in that fixing. You have a proprietary technology that allows us to do that, right, Jay?
Exactly. So, there's so many parts of this process, the first of which is defining the issues that matter, right? Creating that mission statement, then working together to get that transparency to see, all right, well, we know that you care about climate, human rights. We know that you care about these issues. Let's look in your portfolio and see which companies are not aligned with that. Then the most important part of this process is to rebuild the portfolio in a way that is aligned with the financial goals, right? So we don't seek to sacrifice anything on the performance. And we can build that portfolio that reflects the exposure that was already there, but to do so in a way that aligns with the values that have been defined. And then it makes it simpler to actually transition from start to finish to a clean portfolio that is aligned with the mission of the foundation. And then, the part that we get the most excited about is the ability to actually understand how much impact's being had.
There is the magic word. I knew you wouldn't come through with it. Thank
Exactly.
you. Impact. People are more interested, or maybe equally interested, in how their portfolio is doing as it is what it's done for society. And that's what they want to be respectful of their companies that they own. And this is an exciting process for us. My thanks. Take care.